This is Horizons Middle East and Africa, our top stories this morning. Nvidia looks to reassure investors after its latest results gets a lukewarm response, even as revenue from data center operators surged. Stocks advance and oil inches higher as President Trump says the U.S. is in the, quote, final stages with Iran, while also pledging to resume attacks if Iran does not agree to his terms. And Iran is also warning it would retaliate beyond the Middle East if the U.S. or Israel renewed strikes, insisting the country was not on the brink of giving in. It's just gone past 8 a.m. across the Emirates, 6 a.m. here in South Africa. I'm Jennifer Zabasaja in Johannesburg, in for Jumana Bersechi. And there is plenty for markets to digest right now, from geopolitics as well to the earnings overnight from Nvidia. Let's get to Abir Abu Omar, who is in our Dubai studio, for a bit of context of what markets are doing right now. Abir?
Good morning, Jen. Look, a sense of caution in U.S. futures this morning, down 0.1% after the S&P rallied 1% higher, 3 sessions of declines before that rally in the S&P. But you're right, Nvidia yesterday, the earnings that came in the after hours, essentially, investors weren't ecstatic about the results, although Nvidia did provide strong numbers for data centers. Their sales forecast for the 3 months leading up to July was at about 91 billion versus 87 billion for the consensus, but the highest range of analyst estimates was at about 96 billion. So Nvidia did slip in the after hours trading. We're keeping an eye on U.S. futures now, not doing much. Now, the interesting story is in Asia. Asian equities are already trading up 2.6%, again, after multiple sessions of declines, led by the Kospi in South Korea that was surging as much as 6%, and that is because of a crisis aversion. Samsung was convinced, or the Samsung Union was convinced, to not strike in a last-minute deal. So that is having an upside on the overall picture. Oil prices a little bit higher this morning. They were slipping earlier on these optimistic prospects of President Trump saying a deal is near, but then the Iranian response said that Iran will retaliate if Iran will essentially retaliate beyond the Middle East if its concessions are not met. When it comes to the U.S. Treasuries, a big story in global bonds last week and over the past 5 days. Today, 10-year yields not doing much, standing at 4.6% almost. That is what we're keeping an eye on, Jen.
Thanks so much, Abir Abu Omar in Dubai. We will check back in with you in just a bit. Let's get back to our top story, though. Nvidia is facing more investor skepticism after its latest results got a lukewarm response, despite an outlook that topped the average estimate. It underscores the sky-high expectations investors have for the world's most valuable company. Let's bring in Bloomberg Intelligence Senior Analyst Robert Lee. Robert, so plenty to parse through from Nvidia right now. Maybe give us a sense of top line, what it is that investors should be paying attention to. What was the takeaway for you?
Okay, well, I think in terms of reported numbers and the guidance they gave, as Abir mentioned in her sort of prelude comments, there was no major surprise. This was the typical beat and raise that investors have been used to over the last, two or 3 years from this company. So the results themselves were solid. The guidance was. I don't think there's anything of any fundamental consequence on there. But as you said, again, in your intro comments, for a company that's trading on quite punchy valuation, for a stock that has done extremely well, and given the backdrop of maybe rising risk aversion, given what's happening to yields and concerns about inflations, it's not surprising that you're going to get some profit taking on the back of that. But there was little of any fundamental consequence from the company. Their GB, or their black oil products, GB 200 and 300, are still shipping well. The management gave reassurance on the Vera product, which is going to start shipping in the second half of this year. Just as an aside, there had been some noise and concerns of maybe a little bit of disruption there, but management put those to bed for the moment. They also raised their dividend and they announced another share buyback. So in terms of fundamentals, nothing of any consequence, but equally there was no major positive surprise. And therefore, given the backdrop, as I said, of risk aversion, you're going to see profit taking.
And yet, Robert, quite a few analysts are paying close attention to the comments or lack thereof of China and exports to China. How are you reading into sort of the dynamics between the country and also the company at this point?
Okay, well, for me, my core focus really is on China tech, sat here in Hong Kong. I don't think there is any major surprise on that. It's very clear the Chinese government, over a number of years now, has been pushing for semiconductor self-sufficiency as in response, really, to the earlier bans on Nvidia products. China, again, has accelerated its efforts to become or to increase its reliance on domestic suppliers like Huawei. That's the clear direction of travel. And also from a business risk management point of view, how can a China data center operator knowingly switch onto Nvidia's H200 now, not knowing what President Trump may do in another few months, whether there's another ban coming or not? It's quite a large risk to try and manage and take on board. Therefore, it's unsurprising nothing came from the summit between President Xi and Trump last week.
Right.
And Nvidia management and CFO were very clear that really, probably the opportunity to market is closed to them at this point in time.
Right. Bloomberg Intelligence Senior Analyst Robert Lee starting us off there. Robert, thanks so much. Asian equities have gained for the first time in 5 days as investors return to the AI trade. A wave of tech IPOs is also keeping enthusiasm for the sector elevated. Joining us now for more context is Rajeev Sibal, Senior Global Economist at Morgan Stanley there in Dubai for us. Rajeev, let's just start with the AI trade because, as you note in your report, the AI capex boom sort of driving U.S. growth. But does the firm have a good sense of what this is really driving the growth of the U.S. economy towards?
Yeah, there's really two components of what's going on. There's the investment itself, and so we've seen continuous upside surprise in capex linked to investment in the United States, and it's actually surpassed non-AI capex investment in the U.S. We expect both to kind of work in tandem in a more positive fashion later this year. But that's been a big, I guess, step change, if you will, for the U.S. economy is the rise of AI capex. And then the second is obviously productivity enhancement. And we're starting to see the early signs of productivity growth in the U.S. from AI. We think this is going to be something that takes a few years to play out. There's a timing debate going on in markets right now, but both the capex and the productivity are really the drivers of a lot of the upside that we've seen in the U.S. over the past couple of years, and we expect it to continue for the next couple of years.
When we look, Rajeev, I want to turn to the Fed minutes because that's also what investors are parsing through a bit this morning. I wonder when you take a look at some of the minutes that we got on Wednesday, what are the indicators that you're maybe paying close attention to, again, for the path of where the Fed thinks the U.S. economy is going to go and potentially what investors are looking into?
We're in the early stages of the inflation pass-through from oil. And our argument, and I think the market is there as well, has been that the oil pass-through to core inflation in the U.S. is more limited. But given the volatility that we've seen in that market in energy and the fact that we often forget that tariff inflation is peaking right now, that these two factors mean the Fed probably needs to be a little bit more cautious than they were before. So we've left our cuts in for 2027. But I think what the Fed is communicating is that they want us to get past both tariff inflation and see the full pass-through from oil before they start making decision on rates. And those are the signals we're looking for, is the micro data within the inflation prints themselves.
Do you share that view when you look at other central banks? Because we are seeing a bit of a divergence, even from where I'm sitting.
Yeah, I mean, this year, I think, is the year about central bank diversion. We see it reconverging next year. But, the challenge for this year is that the oil pass-through to core inflation in the U.S. looks very different than it does in the euro area and even in the U.K. And this differentiation makes it a big challenge for central banks to be able to anticipate how to react. The ECB, we have hiking in June, kind of in reaction to the oil uncertainty, but also more importantly because they're concerned around inflation expectations. So even though PMI data in the euro area has surprised to the downside last print, and we kind of expect more of the same in the next print, the euro area is having to focus more on inflation. That's part of their mandate. That's part of their focus. And they're concerned about inflation expectations just because that pass-through from the oil to the core inflation is more persistent and it's stronger. And as a result, they're reacting in one direction while the Bank of England and the Fed are being a little bit more cautious and a little bit more patient because they don't have that same kind of pressure, A, from the pass-through, and B, their mandate allows them to think a little bit more about the growth risks. And so this diversion, we think, continues for the next couple meetings. There's going to be a lot of uncertainty. Central banks are going to be focused on the oil price, its volatility, and we're going to have to take it meeting by meeting, probably until late Q3, early Q4.
What does this mean then, Rajeev, for the dollar?
So the dollar has been kind of stuck for a little while. The big move of last year has not been replicated. We do think that this kind of suggests that a weaker dollar is in for, but perhaps later in the year. The challenge is that we still see the Fed cutting rates early next year. I mean, if you look at the core data, as we mentioned, we were focused on the micro data. Actually, underlying core inflation, services inflation is behaving. And you can see that prior to the oil shock, there was a downward trajectory. The Fed needs the confidence that that downward trajectory is still in place after we get through tariffs and oil. But if that's the case, then we actually can see how the Fed would continue cutting rates, and that would allow the dollar to continue to ease a little bit further. Though we are close to its trading channel here.
Yeah, we are seeing the Bloomberg dollar marginally up this morning. Rajeev Sibal, Senior Global Economist at Morgan Stanley. Rajeev, thanks so much for joining us this morning. Now, still ahead, we'll take a deep dive into Nvidia's earnings with Josh Gilbert, APAC and Middle East lead analyst at eToro. But up next, we'll talk to Troy Rohrbaugh, co-CEO of JPMorgan's Commercial and Investment Bank, as he visits the Middle East. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Russian President Vladimir Putin has left Beijing after a day of talks with his Chinese counterpart Xi Jinping. The two leaders signed a pact on deepening strategic cooperation and other agreements ranging from trade and technology to railway construction. But there was no mention of a key gas pipeline project. Xi also called for a comprehensive ceasefire in the Middle East. Bloomberg's been told that OpenAI rival Anthropic is on track for its first profitable quarter as demand for its AI software drives a sharp revenue surge. A source says the Claude maker expects to post $10.9 billion in revenue for the second quarter, more than double the prior period. Anthropic is said to be considering an IPO as soon as October. Now, Wall Street banks have been rapidly expanding across the Middle East, where many countries in the region have been undergoing multi-billion-dollar investment programs in order to remake their economies. Let's head to Dubai, where Bloomberg's Abir Abu Omar is with our next guest. Abir?
Thanks, Jen. Joining me now is Troy Rohrbaugh, who's co-CEO for the Commercial and Investment Bank at JPMorgan. Troy, thank you for joining us on the show today. Welcome to Dubai. I know that you're visiting. Let's start with the visit and the reason you're here. What message are you sending visiting at this time?
Sure. My partner, Doug Petno, and we were co-head of the Commercial Investment Bank together. We thought it was just extremely important to be in the region, first for our employees, make sure we're here for them and we're supporting them, and then, as importantly, for our partners, our clients across the region. So it's been absolutely great to be here. We've been in multiple places, started in Qatar, Saudi Arabia, Kuwait, Abu Dhabi, and now here in Dubai.
Right. And, the region obviously right now is going through a lot of turmoil. The Iran war has been going on for a while. To the investors, particularly in this region, and, this region is home to sovereign wealth funds that are worth trillions of dollars, what message are you trying to relay?
It's very important for us to show support. I think a lot of people can be supportive when times are good and things are growing and there isn't stress. We want to show our support in times that are more difficult. So we've leaned in aggressively in the region. We've increased our risk limits since the start of the conflict. We've increased our lending to our partners significantly across the region. And we wanted just to be here and have those conversations and relay those commitments in person.
Okay. Well, let's pivot a little bit to deal making. You've been bullish on that. do you see that change in global deal making? Are you seeing a slowdown towards the end of the year because of the risk that is stemming out of the region?
It's hard to tell exactly what the end of the year will look like, but so far it has remained really robust, even in the region. Obviously, ECM and M&A has slowed down a little bit, but to be honest, much less than I would have expected. So, we're quite bullish that when we get to the other side of the conflict, which is hopefully soon, that it'll pick right back up. And, last year was a record year in the Middle East for M&A and ECM activity. It might not be exactly at that level because of the conflict, but we would expect it to really start to pick up when we get to the other side of this.
And when we talk about large sort of corporate deals around the world, we've seen a surge or a pickup in that since the second half of last year. Now, on the other side, private equity in comparison has lagged. Do you see a reversal of that trend this year?
I think we've seen, as you said, a pickup in strategic transactions from large corporates. I would expect that to continue. Private equity is a little bit more a reflection of current market conditions. So if they improve, I'd expect it to pick it up. But I still think it'll be dominated by the more strategic for now. But again, it's still robust in private equity, just a bit slower than it was before.
And look, we've been talking, we spoke a little bit earlier, and we just had Jamie on in your conference in China. And Jamie has been quite vocal about private credit and the risks that stem out of private credit. Now, do you see that systematic risk in private credit still exists? And is it still tech that is leading to those risks in those funds?
Sure. I mean, we are obviously a very conservative company when it comes to managing risk. We always think about the downside. And, we're thinking about credit. Obviously, I think all of us at JPMorgan think if we get a downturn, credit may perform worse than I think the market is pricing at this point. But that's not specific to private credit. I don't believe private credit is systemic. When you look at its size, scale, the leverage, the type of funding that is more matched than we've seen in the past, I think that doesn't mean it can't be stressed, doesn't mean you can't lose money there, but I don't think it's systemic. I worry more about credit more broadly, not specifically private credit.
And when we, just bringing it back to the region and the risks that have been creating consequences around the world, we've seen over the past week yields across global bonds surge to levels that were the highest in decades. And, they've paired some of those gains recently. Do you see that risk continuing to be the case as long as this war in the Middle East creates those inflationary risks?
Yes, I think the move in rates and really the reaction to inflation, which is causing that move in rates, is the most important risk that we have in the economy right now. I think there was already a lot of inflation in the U.S. economy particularly, but you throw the conflict on top of it, and I think it's accelerated. So the fact that we're having inflation above expectations, above what the central bank is targeting, means that there's going to be pressure on rates. And I think if that inflationary pressure continues and you see rates go materially higher, I think that's going to put a lot of pressure on other markets. And that's one thing we're watching very closely.
So the Fed will likely hike rates instead of cut them?
We have a new Fed chair. We're excited about that. I think it's an excellent choice. It'll take time to settle in. My expectation is that they won't do anything in the short term. But my personal view is there'll be more pressure on them to hike rates than there will be to cut.
All right. Well, Troy, thank you so much for joining us here in Dubai. Jen, that was Troy Rohrbaugh, co-CEO for Commercial and Investment Bank at JPMorgan. Back to you.
Thanks so much, Abir Abu Omar there in Dubai. Now, coming up, we stick in the Middle East. President Trump says the U.S. is now in the final stages with Iran as Tehran vows retaliation beyond the Middle East. We have the latest next. This is Bloomberg. The U.S. and Iran have traded threats of escalation, even as President Trump says the U.S. is in the final stages of the conflict.
Everything's gone. Their Navy's gone. Their Air Force is gone. Just about everything. The only question is, do we go and finish it up, or are they going to be signing a document? Let's see what happens.
In a post on X, Iran's President Masoud Pezeshkian says forcing surrender through coercion is an illusion while calling for mutual respect. Tehran has also warned it would retaliate beyond the Middle East if the U.S. or Israel renew strikes. Joining us now is Paul Wallace, Bloomberg's managing editor for MENA Economy and Government. Paul, thanks so much for being with us. So what exactly does President Trump mean, if you could parse through the words that we're hearing from the president, by the final stages? Are the two sides actually close to a deal?
Hi, Jennifer. His words are confusing to, I think, not just us, but to traders around the world. And oil dropped quite heavily on his remarks yesterday, and there was a bit of relief rally in things like the bond markets. Initially, people thought that he was implying that the U.S. and Iran were on the brink of signing or agreeing to some kind of permanent peace deal, but then he almost immediately walked that back a bit by repeating what he said before, that he hopes Iran agrees to something soon. I think we can say that there definitely is movement behind the scenes between the U.S. and Iran via Pakistan, which is the main mediator. And at the moment, Iran is assessing or going over the U.S.'s latest proposal. We don't quite know the details of that. But in short, the U.S. clearly wants to get a deal over the line and would prefer not to go back to resuming hostilities with Iran. But, of course, Trump and people like Vice President J.D. Vance are very clear that that is the route they might go down. They may be forced to resume this war if Iran doesn't agree to their terms.
And Paul, quickly, how serious is the threats, though, that we're hearing from Iran?
I think it's very serious. You know, if we go back to late February and March and until the ceasefire in early April, Iran caused a lot of damage across the Gulf and pretty significant damage in places like Israel. So I think it has, all assessments suggest that it has the capability to once again cause havoc across the region if a hot war does resume.
So quite a lot to still pay close attention to. Paul Wallace in Dubai. Paul, thanks so much for the update there. Now, coming up, Nvidia's outlook fails to impress investors. Despite beating estimates, we discuss with Josh Gilbert, APAC and Middle East lead analyst at eToro. Next, this is Bloomberg. This is Horizons Middle East and Africa, our top stories this morning. Nvidia looks to reassure investors after its latest results get a lukewarm response, even as revenue from data center operators surged. Stocks advance and oil inches higher as President Trump says the U.S. is in the, quote, final stages with Iran, while also pledging to resume attacks if Iran does not agree to his terms. Iran is also warning it would retaliate beyond the Middle East if the U.S. or Israel renewed strikes, insisting the country was not on the brink of giving in. It's just gone past 8:30 a.m. across the Emirates, 6:30 a.m. here in South Africa. I'm Jennifer Zabisaja in Johannesburg, in for Jumana Bersechi. And as we have been talking about all morning, geopolitics are in focus, as well as earnings and potentially more IPOs on the brink. But let's check in on how markets are faring. Abir Abu Omar is in our Dubai studio for more. Abir?
Good morning, Jen. I mean, you said it. It's geopolitics and earnings, but particularly when it comes to AI, Nvidia's earning came out yesterday. Slipped in the after hours. But this morning, when we look at the U.S. futures image, it's really trading sideways. It was declining a little bit earlier. Now, the S&P had a positive close yesterday after those Nvidia earnings and the AI euphoria returning to the picture yet again. The interesting story this morning is when it comes to Asian equities trading 2.7% higher, led by South Korea's Kospi. And the story there is because of this risk aversion that happened with Samsung. Samsung Union was going to go on strike yesterday, but it was a last-minute deal, should I say, was reached, and that risk was averted. So you're seeing the MSCI Asia Pacific trading higher this morning. The Kospi was 6% higher, again led by its largest constituent, Samsung. Now, when it comes to Brent crude, it is ticking up by the minute. It was gaining a little bit less. Now it's almost 1% higher, and that is because probably some risk is coming back to the picture now. President Trump did say that a deal with Iran is close, so a sense of deja vu there. Iran did say that it will retaliate beyond the Middle East if concessions are not met. So again, we're seeing very similar narratives come into the picture, leading to oil prices or Brent being close to $106 a barrel. When it comes to Treasury yields, not doing much this morning, completely unchanged. The 10-year yields stand at 4.6%, Jen. Global bonds rallied last week, or global bond yields rallied last week on those inflationary risks stemming out of the region. Now, if we flip the board, an interesting chart that I was taking a look at this morning has a little bit to do with the tech picture in the United States. And this is a plug of the VIX index versus the NASDAQ. And you could see that volatility, which is what the VIX gauges, has dropped massively when plugged against the NASDAQ. Now, the NASDAQ had a run because of the tech euphoria, but also the easing expectations of prospects of hostilities returning in the Middle East. So I thought that was a very interesting chart to be plugged this morning. Now, the VIX, or volatility across equities, had surged this year to really high levels because of the war in the Middle East, the AI scare trade, and the software sell-off that we saw earlier. Now it is dropping quite massively in comparison with the NASDAQ's performance, Jen.
Yeah, quite a lot of sentiment being driven by tech right now. Abir Abu Omar in Dubai. Abir, thanks so much. Let's stick to one of the biggest tech companies. SpaceX has filed publicly for what could be the largest ever IPO, targeting a valuation above $2 trillion. The documents also reveal a net quarterly loss of more than $4 billion. Bloomberg's Avril Hong joins us now with more. Avril, what else are we learning from this SpaceX filing?
Yeah, this filing was a much anticipated one. So we're finally getting a glimpse into the world's most valuable private company. And you're seeing how its revenues have been rising. So first quarter of this year, it was effectively about $4.7 billion. But the revenues is not keeping pace with its expenses. And it's been spending, of course, on compute as well as launch infrastructure. You think about its Starship rocket project, it's already $15 billion in, which is a lot higher than initially projected. And we are also learning that based on the shares that Elon Musk currently owns, effectively he will have 85.1% voting power. So public investors will find it very, very, very difficult to influence governance. We're also learning how Goldman and Morgan Stanley are leading the deal. And as Bloomberg reported previously, we could see marketing as soon as about 2 weeks from now, following which we'll get information on pricing, and then it'll begin its trading on the NASDAQ.
And Avril, we could also then see OpenAI being next, which is also, it could be highly anticipated. What details can you give us about that?
Yeah, OpenAI is an interesting one because it has been locked in a legal battle for more than 2 years with Elon Musk. And earlier this week, we saw how a judge dismissed the lawsuit. Essentially, he was alleging that OpenAI went against its initial mission in becoming a for-profit company, which its initial mission was more about public good. So now that this case is behind it, I think OpenAI is going to be very keen to get the show on the road when its IPO is concerned. And we're hearing how sources telling Bloomberg that it could file confidentially in a matter of weeks, as soon as Friday. And the goal is for it to go public in the last quarter of this year. Now, this is coming against the backdrop of an intense race with its rival Anthropic, which of course is also racing to the public markets. And we know how it could actually see its first quarterly profit this quarter just from the revenue jump thanks to the popularity of its AI agentic tools among enterprise customers at a time where OpenAI itself is seeing how it's missed some of its own internal targets, including on revenue and user numbers. So very interesting in how the race to the public markets is shaping up for these AI companies.
Yeah, shaping up to be quite a historic 2026 for the IPOs. Avril Hong, Avril, thanks so much. Now, Samsung shares jumped after it reached a tentative last-minute deal with a labor union, averting a potentially crippling strike that had been scheduled to start today. The agreement includes a performance bonus system, an average wage increase of 6.2% this year, and improved child support payments and housing loans. The union suspended its plan for an 18-day strike, saying it'll vote on the proposal this week. Let's get back, though, to Nvidia earnings. Its outlook failing to impress investors despite beating estimates. That's underscoring the high bar set for the world's most valuable company. Nvidia also upped its shareholder rewards, announcing an $80 billion buyback and a much higher quarterly dividend. Joining us now to discuss is Josh Gilbert, lead analyst for APAC and Middle East at eToro. Josh, so we were just mentioning there, Nvidia beat, raised again, and the stock down in after hours. What is the sense that you're getting from what investors are looking for with this company?
Yeah, great to be with you. Look, I think ultimately this is what we've come to expect from Nvidia, right? The market has grown accustomed to perfection. And although we got perfection from Nvidia today, when you've got a company the size of Nvidia is, it becomes very difficult to keep impressing. And I think it tells you everything about how high they've set the bar themselves, but also how high this bar has been set across the whole AI trade. I think when we think about it, right, a company of this size still delivering 85% revenue growth, over 90% growth in its data center business. Those are just staggering numbers. So to really not see shares move after hours, I think tells us everything we need to know about what investors are expecting. But we've also come to expect it in general, right? If we look at the past quarters that we've seen from Nvidia coming into earnings, shares have risen. And then ultimately, the reaction that we've seen has been a little bit muted. So, yeah, I think it's how high they've set the bar. And although Jensen keeps delivering, the market always seems to want a little bit more.
I know, prize to perfection. Josh, I wonder when you dig into some of the numbers and the comments we also got from Jensen Huang, how important do you see networking and GPUs to the growth of this company moving forward?
Yeah, I think that's what really stood out to us was that sort of broadening growth story, right? For a long, long time, it was gaming that really drove Nvidia. Then, of course, when the AI boom happened, we saw data center revenue continue to rise. And I think that's what really stands out for us and makes Nvidia one of the best businesses in the world, right? You know, we're now seeing networking revenue rise. And as we see those AI factories scale, that networking layer becomes another growth engine in its own right. You know, it's not just a chip company anymore. You know, it's looking to become that full stack infrastructure layer for AI. So again, this was a business that they ultimately, didn't have much revenue in previously, just like in data centers, but now we're seeing it become a bigger part. And I think that's really, really important for the continued growth. You know, they also mentioned about the move into sort of CPUs away from GPUs. And that's ultimately what we're seeing in AI right now is that sort of move away from this sort of training level, right? It's moving from the thinking to the doing. That thinking level was what needed GPUs. We're in that doing phase now. We're talking agents, inference, real world deployment, and that's going to require the different mix of chips. And we heard Jensen talk about that move to CPUs, which has previously been dominated by Intel and AMD. But ultimately, Jensen wants a slice of that. And we heard from him that we'll be seeing that from Nvidia this year.
Well, and just on that, Josh, do you think Nvidia still really is driving the current AI trade? Because Jensen Huang, I was also reading, he was pointing out the economics of AI will shift. Does it broaden out to some of these other companies, or is Nvidia still the driver here?
Yeah, I think ultimately, when we're looking at the AI trade, it's still got plenty of runway, but I think the winners list is getting longer, particularly, as I said, as agentic AI takes off. that value is going to spread across more of that sort of compute stack. And as I say, not just GPUs. For us, Nvidia is the name that still dominates within this space. And I think, as I say there, yes, they dominated in GPUs. They're looking to dominate the full stack. So I certainly think the opportunity is broadening. And I think it's, a wake up for Intel and AMD. We've seen both share prices double this year. But ultimately, if you're seeing Nvidia, the world's biggest company, generating $40 billion in free cash flow in the quarter, you'd be pretty worried about your business when we know what Nvidia can ultimately do. But what we've also seen this year as well is the broadening in terms of infrastructure. We've seen memory names continue to sort of do very well this year. And I think that just goes to show of how broad this AI trade is. And it's not just Nvidia anymore as well.
Josh, maybe really quickly, can you just point out your commentary around China? Because as I talked to a reporter earlier, there was a bit of commentary, but not as much maybe as investors were hoping for.
Yeah, we really didn't get much in the way of China. The guidance was essentially zeroed out, no contribution baked into that sort of forward forecast. So I think one positive there is if we get any future revenue, it's pure upside if they obviously do start to sell again. I think the biggest part here is the question was, will Washington let Nvidia sell to China? And I think that shifted now to, does China even want to buy? And I think that really matters because, the upside is no longer in Trump's hands. It's sort of moved to Xi's, right? And I think Beijing is backing domestic names. DeepSeek is moving towards Huawei. Alibaba moving its own GPUs in mass production. And I think that is a problem for Nvidia. But again, we continue to see those numbers coming through even without that revenue. So he obviously, Jensen obviously went to Beijing as part of Trump's delegation, hoping to break that deadlock. Came home pretty empty-handed. But as I say, I think for now, clearly, it is not affecting Nvidia's top and bottom lines. But it becomes a China issue now and not a Washington issue.
Yeah, we'll see how Nvidia trades when it opens on Thursday. Josh Gilbert, APAC and Middle East lead analyst at eToro. Josh, thanks so much for your insights today. Now, for a look at some of the other stories we're following, Saudi Arabia's public investment fund has pulled support for Live Golf, casting doubt over the future of the breakaway league. The shift is part of a broader reassessment of spending in Saudi Arabia amid widening budget deficits and economic pressure from the regional conflict with Iran. France will host the Esports World Cup this summer in Paris, switching from Riyadh, Saudi Arabia, due to the war with Iran. The move to Paris calls the Saudi government strategy to promote the region as a destination for gamers into question. But the French government says it reflects the deepening ties between Saudi Arabia and France. Now, coming up, stay tuned for our interview with JPMorgan boss Jamie Dimon. That's next. This is Bloomberg. JPMorgan CEO Jamie Dimon says investors may be underestimating the risks from rising debt and higher interest rates. In an exclusive interview, he warned rates could climb much further.
I think they could be much higher than they are today.
Oh, yeah?
And,
how much higher?
You say decades, but we've had like one of the greatest bull markets. Other than brief COVID, since the great financial crisis, we've had a huge bull market, huge lower rates for the most part for a long period of time. But the world changes, like we may have gone from a savings glut to not enough savings, the AI investments, you're talking about in America alone, $450 billion last year, $750 this year, $1 trillion next year, global deficits at all-time highs, and they are huge. So the governments, including ours, has to borrow huge sums of money, more next year than this year. And so, people who own bonds, they tend to look at these things, and both inflation and demands for capital can push up rates.
The thing is, it's not just an inflation story right now. It's also, I guess, a credibility story, right? I mean, we have an environment where everybody's trying to pay debt, and governments around the world have so much debt at a higher level. I mean, at some point, it's going to hit.
Yeah, it is going to hit. Like, U.S. government debt is $30 trillion. The average rate is 3.5%. So even today, they can't possibly refinance it at lower than that rate. They have another $2 trillion to do this year. So yeah, but the thing is, we don't know when. We don't know when the world gets too scared about that. When inflation makes it where people don't want to own long-term duration securities, or when it's just a demand for capital. There have been examples in history where there's so much demand for capital, rates are going up, but it's for a good reason. People are making productive investments in the world. Government spending is often not that. Government spending is much more consumption-related, which doesn't help future productivity. So, and all that spending too drives corporate profits. So people shouldn't be that surprised that corporate profits are doing quite well too, which helps obviously the stock market.
The question, I guess, if I could get you to look at the crystal ball, right? And what yield would that be spillover to the economy, to policy, to markets?
Yeah, so I'm very cautious about crystal balls because I don't think anyone has a crystal ball. We look at all potential possible outcomes, and you'd be surprised, from recessions with inflation, from recession with no inflation, from home prices down 40%, stock price down 40%. It's a wide range of outcome. I think when people think this is our forecast, that's what's going to happen, I think that's an intellectual error. I think you should be much more thinking about range of outcomes, possibilities, probabilities. And for us, we want to handle all of them so we can serve our clients. So I'm not that worried about our profits going down and the stock going. That doesn't worry me at all. I want to serve our clients and do a good job. And I do worry about the geopolitics for the future of mankind. That's a far more important issue in my mind. But just looking forward, I think it's my own view, and it's just different than other people, is that rates can easily go up more and credit spreads can go up more. If people
and everything's going to be okay, even with rates going up more?
No, at one point you can have a lot of people who have to refi at higher rates. So there's this general assumption that, I can refi all this debt at roughly the similar rate. Well, if credit spreads go up, people, companies, and governments will have to pay more. And so that can put stress in the system and easily could cause a recession type thing. Again, I'm not terrified of recession other than it hurts people who get laid off. But I think as a scenario, that's a very possible scenario.
Jamie Dimon, Chairman and CEO of JPMorgan Chase there, speaking with Hasanda Amin. Now coming up, the Iran war is reshaping the inflation outlook for African economies and central banks. We'll discuss that next. This is Bloomberg. The World Health Organization says the Ebola outbreak in Central Africa likely spread for months before being detected. Officials believe a super spreader event in early May might have accelerated transmission, while testing challenges delayed identification of the virus. The WHO has tallied nearly 600 suspected cases and 139 deaths linked to the outbreak in Congo and Uganda. Now, let's turn to monetary policy here. Central banks across Africa are turning more cautious as the Iran war pushes up fuel and food prices, complicating the inflation outlook. Nigeria and Ghana have held rates steady for now, while South Africa is increasingly seen heading towards a rate hike as inflation accelerates. For more, we're joined by Yvonne Mango, Africa economist for Bloomberg Economics, here in studio with me. So, Yvonne, let's just start maybe with the Iran war and how that's feeding through into the decisions that we're seeing from central banks. How are you assessing where we're at right now?
So we're starting to see the impact of higher energy or fuel prices feeding into inflation. We had South Africa's inflation show that fuel prices increased by as much as 20%, and that led to a 5.5% month-to-month increase in South Africa's inflation or transport price inflation. And that's what contributed to the headline inflation number jumping as high to 4%. In the case of Nigeria, we're still yet to see transport prices increase. However, energy prices have certainly started climbing. They've increased by about 8% month-on-month in the month of April. So we're starting to see the impact, at least, of higher energy and fuel prices feeding through inflation. The big question now is whether we start to see second-round effects. If that's the case, then central banks will have to act.
Which is probably, and maybe you can correct me, why we're seeing a bit of divergence in terms of what central banks are doing on the continent.
Yes, so the divergence you're seeing is for two different reasons. consistent. So, for instance, Nigeria opted to pause. We thought they had room to cut, and the reason for doing so is because they've got very high positive real rates, over 10%. They've also built up a very strong foreign exchange reserves buffer, which is supporting the currency, which means easing in policy shouldn't really undermine the currency and should not undermine the trajectory because policy remains restrictive. Similar story in the case of Ghana, where inflation is as low as 3%, but the policy rate is as high as 15%. In the case of South Africa, it's a little different. As you recall, last year, the inflation target was lowered to 3%, with about a 1 percentage point bound either side of that 3% target. We've now hit it. We're now sitting at 4%. So for that reason, the central bank may need to act. There's also signs that we're seeing emerging second-round effects, although headline food inflation did ease on a year-on-year basis. The month-on-month number suggests that we are beginning to see some pickup. So for that reason, we're likely to see countries like South Africa tighten sooner than Nigeria. And also in the case of Kenya, also very much smaller positive real rates. In that case, we could see them tighten as well.
We still have quite a bit of central bank decisions to come. Yvonne Mango, Africa economist for Bloomberg Economics, joining us here in studio. Yvonne, thank you so much. Let's just take a quick look at where markets are trading right now. If we take a look at U.S. equity futures, largely unchanged right now, though, as we've been speaking about all morning, a lot of the focus is on the AI trade and potentially how that feeds in through to the rest of the markets. Euro Stock 50 futures marginally up as well right now. That is it for Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Stick with us for Daybreak Europe. This is Bloomberg.